Esty, thank you so much for joining me again on the channel. But this time we're going to talk about refinancing your mortgage.
Be more careful with that word. It's very true. No, I want to increase my wealth and I want to do something with my money, and my equity is now in my home. Now what do? More commonly, a refinance just means taking my existing mortgage and increasing my limit. So you want to take out a little bit more equity to maybe renovate or buy another investment property and start your legacy, of course, of properties.
Welcome to Mortgage Approval Help. This video series features discussions with leading industry experts who offer their insight around the hottest mortgage financing topics and the economic factors that may impact your mortgage. Often these conversations cannot easily be found online. We are not here to sell you mortgage services though. We're here to bring valuable information to you, the consumer, so you can make better financial decisions and find the right solution in your important time of need. With continuous changes to the mortgage lending rules, we understand how difficult the landscape can be to navigate, and we want to help. We want to help bring clarity to the pressing issues so that you can make the most informed decision possible. We're here to help you get approved. As for me, I'm your host, Sam. I'll be hosting this video series. I'm also a podcast host. I promise you're going to get a lot of value from these videos. I'm so pleased to introduce today's guest, Esty Zaks. She holds an MBA and is the owner of Strategic Mortgage Solutions, which can be found at mortgageinsights.com. She is also the director and mortgage agent at Mortgage Outlet Incorporated. Esty is a mortgage professional with 13 years experience in banking who enjoys helping clients save money while offering top-tier service. Esty, thank you so much for joining me for today's conversation. There's going to be so much nuggets in here for our viewers. You have such a great wealth of knowledge in a very important topic. So thank you so much for joining me.
Thank you so much. That was very kind. I look forward to chatting and answering all the questions. This is great. If you're listening, that means that you care about your own situation and bettering it and being prepared. So let's do it.
But guaranteed I'm going to be charged some type of penalty for refinancing my mortgage, or will that only be if I'm doing it early? Like, let's say that period is 5 years and it's 10 years in and I haven't paid my mortgage off yet and now I'm refinancing.
So that's good because there's a lot of factors in there. So when you have an amortization, let's say 30 years or 25 years, within that you have your term. Your mortgage term is going to be less than that. Typically it's 5 years, it could be 10, it could be 2, but that's your contractual obligation. If you've gotten to the end of your 5 years and you're doing the kind of refinance where you're just potentially just renewing your mortgage, or refinancing to a different institution, there's no penalty at that point because you've met your contract. You paid that institution for 5 years and now you're contractually open. So you can choose to renew that's not a refinance if you just take the same amount for the same remaining amortization. That's called a renewal. However, at that time, when you're no longer obligated to that institution, you can open yourself up. The market can bid for your business. Maybe another lender will give you a better rate to switch over. Maybe they'll cover the costs. They're minor costs, but let's just say to cover legal and an appraisal fee to switch to a different lender. Or you definitely want to increase and have a line of credit. If you switch lenders, the other lender will pay your fees as opposed to staying where you are, then you have to pay the fees, right? So if you're at the end of the term, there's no penalty, but you can negotiate the best for yourself. So you're strong at that point. If you're within the term, you're somewhat, as I said, married to that institution, you're very likely to refinance in-house to avoid penalty and to keep the mortgage.
And you talked about 2-year term, 5-year term, 7-year term. Is that something I'm negotiating when I'm getting my mortgage, or are they just telling me this is my term?
So an in-depth conversation would have options where you can choose it. So banks want you to subscribe for 5 years so that they can take your money and put it on the market and make more money. So they're going to encourage you to take a 5-year rate by giving you the lowest rate for 5 years. And if you let's just say you're offered 2% for a 2-year rate or for a 5-year rate. If it's historically low to get 2%, then it's in your best interest to hold that for longer, offsetting the risk of having to break that mortgage. But if you get the same rate for a longer period, that should be basically a more attractive thing because you're promised it for longer. So when you choose the rate, it depends on what you want to do, how long you want to obligate yourself for, basically.
And there's different types of penalties as well, right? There's the IRD, and then there's the 90-day interest. Can you elaborate what an IRD penalty is?
Yes, the IRD is the interest rate differential, and that's the interest the bank or institution would have made from your mortgage, which is interesting when you think about where we're at now, because the rates are down low, and they were, a few months ago, they were high. So if you were going to break a 3% mortgage to take a 2% mortgage, the bank is going to take back your money and only be able to lend it at the 2%. So the interest rate differential is the delta there, the difference. So your penalty is like 1%. It's very high. If, however, you take a 3% rate and the rates go to 4%, you can imagine the lender's happy to take the money back and then make more on it. So your penalty will be almost nothing. So depending on the market, your IRD could be atrocious and it could be no big deal. So it depends on the market, and unfortunately, usually when you break a mortgage, it's because you have to. So you just sort of take a gamble what point in the market that would be. But it's generally a scary thing. If you have any risk of breaking a mortgage, you might consider taking a variable rate mortgage, because instead of an IRD, the variable rate mortgage penalty is typically 3 months interest. So it's going to be a fraction of the amount, a couple $1,000s maybe. And yes, that's not the prettiest bill to pay, but it's a lot more favorable than like the 10s of 20s or 20,000 penalty that comes with a fixed rate typically.
Thank you for viewing this episode of Mortgage Approval Help. I hope you found this conversation as informative as I did. And if you're currently on the path to home ownership, or you're in need of help to make sure that you find the right mortgage product for you, we have a nationwide network of agents waiting. To access this network, or to just send us an idea for a future video topic you'd like us to discuss, you can message us on Facebook at Mortgage Approval Help, or shoot us an email to solutions@MortgageApprovalhelp.ca. And please do not forget to like, share, and subscribe to this video. It really helps other people find this video series. And remember, we're here to help you get approved. I look forward to seeing you in the next video.